Viatris, a name many associate with generics, is making a bold move that could completely reshape its future. The company just snapped up Aculys Pharma. And this isn't just another business deal, it's a strategic pivot towards high-value, innovative medicines. Let's break down what this means for Viatris, for patients, and for investors. So what exactly did Viatris get in this deal? They've secured the exclusive rights in Japan to game-changing drugs for the central nervous system, or CNS. The first is pitolisant. This isn't your typical stimulant. It's designed to treat excessive daytime sleepiness in people with narcolepsy and obstructive sleep apnea. Imagine struggling with overwhelming sleepiness during the day, no matter how much you slept the night before. That's the reality for millions. Pitolisant offers a new way to enhance wakefulness, but without the harsh side effects of traditional stimulants. It works by targeting histamine receptors in the brain, a totally different mechanism that not only keeps you alert, but also reduces cataplexy, those sudden losses of muscle control often triggered by strong emotions. In people with narcolepsy, the second asset is Spidea nasal spray. This is a lifesaver, quite literally, for people experiencing severe, prolonged seizures known as status epilepticus. In an emergency, every second counts. Traditional treatments often involve injections, which can be slow and difficult to administer outside of a hospital. Spidea is a simple nasal spray. It's fast-acting, easy to use, and can be given by a caregiver at home. This convenience is a massive leap forward in acute seizure management, offering peace of mind and faster control when it's needed most. Together, these two products don't just add to Viatris's portfolio, they target specific, high-need areas in neurology where patients are desperate for better options. It's about improving quality of life, boosting daily productivity, and delivering real, tangible health outcomes. This acquisition is a clear signal of Viatris's new direction. For years, the company has been a giant in the world of generics, focusing on high-volume, low-cost medications. But the generics market is tough, with constant pressure on pricing. Now, Viatris is evolving into a hybrid company, blending its generics foundation with a growing focus on branded, specialty drugs. This is a smart move, especially in markets like Japan and the wider Asia-Pacific region. Why? These regions have aging populations and a rising number of people dealing with CNS disorders, creating a huge and tapped market for innovative treatments. Viatris isn't just following a trend, it's strategically positioning itself for the future. By acquiring Aculys, they are shifting from a volume game to a value game. They're not just selling pills. They're providing sophisticated solutions to complex medical problems, and they have the infrastructure to do it right. Viatris already has a strong presence in Japan's CNS market, which means they can get these new products to doctors and patients efficiently. This move places them squarely in a high-margin space, capitalizing on the demand for more effective and convenient therapies. Of course, Viatris isn't entering an empty arena. In the world of sleep medicine, they'll be up against established drugs like modafinil and sodium oxybate. But pitolisant has a key advantage: its unique mechanism of action. By working on histamine receptors, it offers a different side effect profile, which could make it a preferred choice for many patients and doctors. Similarly, while other nasal sprays for seizures exist, Spidea aims to win on convenience and reliable dosing. But the real competition is with other specialty pharma companies like Jazz Pharmaceuticals and UCB. This is where Viatris's hybrid model becomes its secret weapon. By combining the cost efficiency of its generics business with the high-margin potential of its new specialty drugs, Viatris can create a unique competitive edge. It can penetrate the market effectively while maintaining a lean operational structure. This isn't just about selling new drugs. It's about building a smarter, more resilient business model for the long haul. So how will Viatris bring these new drugs to the people who need them? The plan is to move fast. Leveraging its existing CNS infrastructure in Japan, Viatris aims to get pitolisant filed and launched by late 2025, while continuing the rollout of Spidea. The biggest hurdle will be securing reimbursement under Japan's national health insurance. To do this, Viatris will need to prove the real-world value of these drugs, showing how they improve safety, quality of life, and even productivity for patients. But the strategy doesn't stop there. Viatris is looking at the long game. This includes expanding the use of these drugs for other conditions, rolling them out across other Asia-Pacific markets, and creating patient support programs to help with education and adherence. A huge part of this will be educating doctors to better recognize and diagnose conditions like narcolepsy and sleep apnea, which are often underdiagnosed. By increasing awareness, they grow the market for everyone. Now let's talk numbers. What does this all mean for Viatris financially? The company is a major player with a market cap of around $11.5 billion. Yes, they've been facing the squeeze from generic pricing pressures, but their cash flow is stable. This acquisition is designed to be what analysts call accretive, meaning it will add to earnings over the medium term by beefing up their branded product sales and expanding their global footprint. Of course, there are risks. Regulatory approvals can be delayed, getting insurance to cover new drugs can be a battle, and convincing doctors to adopt new treatments can be slower than expected. However, Viatris has structured the deal smartly. A large portion of the payment to Aculys is tied to hitting specific milestones. In simple terms, Viatris only pays the full price if the drugs are successful. This clever structure limits the financial risk while keeping the upside potential. So, what's the 5-year outlook? Let's get into some forecasting. Analysts project that Viatris' new CNS franchise, led by pitolisant and 𝗪𝗏𝗪𝗔, will see significant growth. Starting from around $50 million in branded CNS sales in 2026, that number is expected to rocket up to about $450 million by 2030. This growth is expected to directly impact the bottom line. Earnings per share are forecasted to climb from around 65 cents in 2026 to $1.10 by 2030. The key catalysts: getting those regulatory green lights, expanding commercially into new markets, and potentially finding new uses for these drugs. Based on a discounted cash flow analysis, which is a common way to value a company's future potential, the target share price for Viatris is in the range of $13 to $15 over the next 5 years. Compared to its current levels, that represents a potential upside of 30 to 50%. While there might be some minor dilution to earnings from payments to Aculys shareholders, in the early years, the long-term growth story remains incredibly strong. To wrap it all up, the acquisition of Aculys Pharma is a pivotal moment for Viatris. It marks a decisive shift from a generics powerhouse to a more balanced, innovation-driven pharmaceutical company. By targeting critical unmet needs in sleep disorders and epilepsy, Viatris is not only positioning itself for financial growth, but also making a real difference in patients' lives. Financially, the deal offers a path to sustainable growth with a significant potential upside for investors over the next 5 years. While there are execution risks, the strategic rationale is solid. Viatris is trading volume for value, building a more resilient and profitable future. This move is a textbook example of how a legacy company can reinvent itself to thrive in the ever-changing landscape of modern medicine. Thanks so much for watching. If you found this analysis helpful, don't forget to hit that like button, subscribe to the channel, and ring the bell so you never miss an update. We'll see you in the next video.